60% of the population is under the age of 25. Do you think they'll go to a bank to open a bank account? I don't think so. I think they'll grab their smartphone, and we have the highest penetration of smart devices in the world. So they'll grab a smartphone, download a wallet, here you go, they're banked in 30 seconds.
FinTech, Payment Solutions and Compliance. As PSD2 and GDPR rain down upon the financial services and broader industries, how are service providers faring 1 year on? What's next on this regulatory front? Moderated by Dirk Urpani, Blockchain Advisory. Stephen McCarthy, Malta Digital Innovation Authority. Kenneth Farrugia, Bank of Valletta. Jaguar Adva, Jaguar Lawyers.
Yep.
Irina Heaver, Bolton Holding Group.
Yep.
Andrew Zvirdzin, U.S. Department of State.
Hey, good night. So, hello everyone. I'll allow the start of this panel to briefly introduce themselves. Maybe we can start with Kenneth.
Okay, good morning, everyone. I'm Kenneth Farrugia. I'm Chief Officer responsible for business at Bank of Valletta, which is the largest bank in Malta. Amongst the responsibilities, I'm responsible for payments and cards business, which is the reason for my presence here. So I look forward to this panel discussion.
Jaguar.
Good morning, everybody. I'm Jaguar Adva. I'm a lawyer and a CPA, but a nice person, though. I do my firm, which is Jaguar Lawyers. We do being a meta lawyer, so we do global licensing and regulations within several countries, which is complicated to challenge. Thank you.
Good morning, everybody. It's great to be back. Thank you very much. My third time in the row to be on this stage. My name is Irina Heaver. I'm based in Dubai, and I'm co-founder of a Dubai-based cryptocurrency exchange called Emirates. I don't know what that other company was, but it's okay. Thank you for being here.
Good morning, everyone. My name is Andrew Zvirdzin. I'm a financial economist with the U.S. Department of State. My policy focuses on digital assets and coordinating among U.S. regulators and international actors, particularly in the cryptocurrency, digital asset, central bank digital currency space.
Okay, so to start and get down to the tough stuff now. As you know, the title of this panel is as PSD2 and GDPR rain down upon the financial services and broader industries, how are service providers faring 1 year on? What's next on this regulatory front? So, Kenneth, what effect has PSD2 had on the financial system's operations, and what steps have been taken to prevent possible compliance and regulatory issues?
Well, look, I mean, the onset of PSD2 last year is a continuum of the evolution we've seen in the payment services space. So if one goes back, I've been in banking for just short of 3.5 decades. Sounds sexier than 35 years. It's too long time. And if you look at the evolution from telephone banking, which brought about a wow factor at the time, and then moving on to internet banking, and now moving on to mobile banking, and technology really is changing the shape of the way that we process payments. I think PSD2 is bringing about two core things insofar as the banking sector and payment service providers as for that. It's bringing about stronger customer authentication, so it's bringing more security to the execution of trades online, predominantly, of transactions online. And I think that's a very important development because it gives more comfort to consumers, to utilize payments online. So that's number one. And secondly, if you look at the way that so far banks and payment service providers for that have guarded data about their clients, I think has shackled somewhat innovation. So what PSD2 is bringing about is a big change in the way that that data, that information on the client, through a consent-based mechanism, is shared with others, whether they are account information service providers or payment initiation service providers or card information service providers. And that is going to change the competitive landscape. So I think one of the biggest impacts that PSD2 will bring about is a big change in competitive landscape. . And it will definitely induce and address the and I'm being self-critical, the lethargy that has, I think, shackled banks in really investing at the pace desired by their clients in technology to give two things: a better customer experience and empowerment on the functionality of a product, right? Be it a card, be it a payment platform. And this is what the new tech fins, the technology providers, the non-bank entities entering financial services, this is why I deem them as being really tech fins, are entering this space now, and they are really pushing banks to remain relevant. So banks really have to struggle strongly going forward to invest in technology, possibly to cooperate with technology providers to bring this customer experience, to bring this empowerment, and to bring a frictionless experience to customers on the payment services space. The second impact, given that through the use of APIs, brings about technology considerations, is cybersecurity. So one of the biggest challenges for banks going forward in allowing APIs to interface with the systems and allowing, through this consent-based mechanism, for that information to flow to the third-party provider is a cybersecurity space. This has shackled maybe the pace at which PSD2 wanted to be rolled out. I think it will be ironed out. I wouldn't be surprised if we have PSD3 in the coming years. But definitely it has brought up an operational challenge. I think lastly, it's an opportunity for banks as well. If they want to remain relevant to their customers, if they still want to enjoy the trust of their customers, because I think that's the only thing that's really keeping customers from moving to third-party providers. And recently I was in a conference and I asked the question, okay, how many, and we can do it here, how many of you have a Revolut card? Okay. How many of you have more than 25,000 on your Revolut card? You see? Single digit. And the reason behind it is trust, right? So banks so far still enjoy the trust of their clients, and clients would put a few thousand euros on their Revolut card, but they wouldn't put $250,000 or 100,000 on the Revolut card. That's a matter of trust. And banks so far still enjoy that trust. But I feel that banks cannot be too comforted with the trust factor, because that trust will be diluted over time and people will start moving to new innovative technology providers.
Okay, thank you. Jaguar. Now, it can be argued that the principal purposes of GDPR and the PSD2 are in contrast with one another. As the PSD2 enacts data sharing requirements for financial service providers, as Kenneth was rightly mentioning here, while the GDPR gives individuals greater control over their data and restricts the freedoms to share it. Financial entities have therefore expressed concerns regarding this sort of mismatch with regard to overlapping provisions in the two pieces of legislation. Do you concur to such concerns?
Well, first we have to take into account the basic conception, understanding that data, knowledge, data about activities, transactions, people, is the new currency in very many ways. Specifically, once, as I refer to my colleagues' words, that banks are still enjoying trust of their customers, it's only thanks to the fact that public memory is so short, and that we forget how relatively easily banks can go and get lost totally, as well as governmental funds and currencies. However, what the GDPR have changed is a very, very strict look of data, how we protect that. It's not per whatever company decides to protect or not. And then once there's such a control of the data, and we're kind of giving back to the public, to the people, the control of their own data and the ability to get it back, to transfer it, to have it deleted, or for it not being acquired and accumulated that way, we kind of taking away the monies or the finance or the currency of such companies. And that will create an inevitable contradiction, I would say, or battle in many senses. So the balance would finally, it's not balanced yet, but the balance would be somewhere among the lines of companies having their business models based on our data, which is their currency, and how much they have to comply. That's one thing. The other point is that the GDPR have made themselves apply to companies not only in European territory and not only upon European resident companies or entities or even people. It's per people and whatever C-level or other levels in companies, but it applies actually all outside Europe. I've just come from a conference in Singapore in which they were kind of amazed that Asian companies with, that might be having an EU customer or supplier or employee would have to comply. And it's not very clear around the world, specifically not outside Europe, which in here we're very much aware of that. So I think the contradiction between the new money and the regulations and governmental care for our privacy compared to capitalism and being able to make money off of it, there's a very, let's say, fragile balance right now, and it will move. It will still move. It's not set, totally set yet. It will take a few years onwards.
Thank you. So, Irina, what benefits do you feel DLT can offer when facing the challenges that PSD2 has brought about in this interplay with the privacy issues?
Well, that's a great question, right? We're at the blockchain conference, so how blockchain can solve our problems, right? The thing is, let's stop finding a problem, throwing blockchain at it, and trying to stick it in there with a search for a solution. Blockchain in 2017 has promised to revolutionize the way we do business with each other, promised to disrupt every government, promised to disrupt every business model. Do you think that has happened? Or do you think, I have some faces shaking their heads. So what has happened? A lot of hype and a lot of searching for a problem to solve, and let's throw some blockchain on it like a magic dust, right? It's not a magic dust. But what has happened, I'm from Dubai, and the Dubai government has announced that by 2021, all of the government services will be on blockchain. We're yet to see that being implemented, but we're quite optimistic. We're in Malta, the blockchain island. The speaker before us was not optimistic about Malta at all. There was a lot of good initiatives, but nobody has seen real tangible results. That's what the speaker before us was arguing. So let's just, is there a reason for blockchain to exist and for DLT to exist? Yes, of course. So what's the most amazing use case active right now? Bitcoin, most secure, most distributed network. You were talking about the banks being trusted and people not keeping their money with alternative payment institutions. That is great. That is fantastic in Europe, where you have the banks. 94% of the population of Europe is banked. Where I come from, 15% of the population is banked, and we are 400 million people. So do you see what the potential is for the spread of the cryptocurrencies, for the spread of the peer-to-peer transactions? It's not Europe, it's the Middle East. That's where the appetite is, and that's where the need is. So I applaud my colleagues in Europe coming up with GDPR, PSD2, and whatever other acronym you'll come up with tomorrow. And as a retired lawyer, I can say that for lawyers, that's amazing when new regulation comes up, because what does it mean? Oh, we can bill our clients. But as a retired lawyer, and I now run a cryptocurrency exchange, my thought is, how do I bring that, how do I bank 400 million people in my region, right? How do I make sure that John can send $5 to Ali across the country? Because there are no banks, right? There are no banks to trust. There are no alternative payment institutions. So cryptocurrencies, that's where I see the use case, and we see what's happening with some people in countries where the entire country, Palestine, has no access to banking at all. So this is what they're using. They're using peer-to-peer transactions. Is there, to answer your question, is there A place for DLT in banking? I'm sure there is. We're talking about the KYC, and let not me start on that rant, whether it's a good thing or a bad thing, or data being stolen. The BitMEX user data is stolen. Now we're questioning: is that really a good thing? Let's rethink that. So perhaps through authenticating the transactions between the banks, for example, the Central Bank of UAE is now testing blockchain transactions with the Central Bank of Saudi, and that's something to look at. It's a pilot, but there is no tangible answer, or there is no tangible result. So to answer your question, is there a place for DLT? I'm sure there is, but we're yet to see that outside of the Bitcoin, outside of the cryptocurrency space.
So thank you, Irina. Andrew. So Irina was giving us her experience from a Middle Eastern perspective. From a US perspective, how has the interplay between, obviously, payment services and privacy issues affected the financial markets and also the relationship between the US and the European markets and maybe even Middle Eastern markets?
Yeah, no, I think these issues are really central to a lot of the regulatory conversation that's going on throughout the United States and throughout the world right now. I'll say to GDPR, we're following the GDPR process very closely within the European Union. Our focus is really on the free flow of data and on protection of privacy, of course. We're concerned, though, that absent greater clarity from EU regulators, the GDPR as it currently exists could be a greater impediment than a facilitator of commerce between the United States and European firms. And we're seeing that, and in conversations that we've had with US firms, there's growing concern about GDPR's role and the lack of clarity, I think, about where we go next. I think taking a bigger perspective as well within the regulatory framework, the question right now that we see is blockchain, is artificial intelligence, all of these technologies, is this revolutionary or is this evolutionary? And I think within the regulatory space, particularly in the United States and among US firms, the shift is going towards evolutionary. That is, the approach is looking at technologies as they emerge within some of these experimental phases and adopting a flexible approach based and scaled according to the risk model of that technology. And so I think one thing I'll just emphasize, for example, and I would encourage everyone to take a look at the G7 paper on global stablecoins, because I think even though that's focused particularly on stablecoins, that provides a model for how you're going to see international cooperation on the regulatory framework for a lot of these emerging technologies. That is, scaled according to the risk. So when global stablecoins became an issue during this last year, you saw all G7 countries come to a consensus about what that looks like, about what the regulatory framework is going to be going forward. The United States supports that approach of a multilateral, multi-stakeholder approach for some of these larger risk-based models. But I think when it comes to some of these smaller technological applications, there's opportunities for sandboxing, and US regulators are very open to sort of a case-by-case approach for some of these technologies, privacy regulations and things like this. But it's all based on the scale of the technology in question. And so I think at the end of the day, there's a certain amount of flexibility. There's a certain amount of complexity. Of course, the United States has 58 different entities that are regulating technologies within this sphere. So coordinating even across all of those different entities is quite a challenge for us. Going back to the original point, though, that you were asking about privacy in particular, I will say that the U.S. generally supports as much an open and free flow of commerce and free flow of information as possible, while respecting know your customer obligations to in the interest of national security.
So, final question, open for all the panel. With the introduction of PSD2 and obviously the GDPR, there has been the concept of open banking. As you rightly mentioned, most of you, the issue of banking is common across. Maybe within your closing remarks, you could comment about how you feel open banking can benefit the different industries that you come from. Okay.
I think open banking is a catalyst to change the way that people are used to banking with traditional operators in the market, with banks in particular. I think the word banking will not remain dominant insofar as the use of services, for financial planning purposes. I think we'll see that being diluted over time, and we're seeing how banks are, really teaming up with tech firms, white labeling their propositions and bringing them to their clients. And likewise, we're seeing big technology providers acquiring banks. So we see this blend between banking and technology providers becoming more accentuated, I think, to the benefit of the customers.
Jaguar?
Well, I believe that first, new banking has to happen. It is happening already, and the old banks just have to deal with that, and they're fighting as much as they can via regulators mainly, and lobbying amongst regulators. So that's one thing. But it's bound to happen because technology always exceeds the regulators' speed of work, if my friend will excuse me here on that. So it is bound to happen. It will have limitations, which regulators will apply naturally. That's what I see.
Open banking is great if there is something to open, right? And there are people to open it to. 95, like I repeat, 94% of Europe is banked. You have amazing banking infrastructure. Your bank is the oldest bank in Malta, as I understand it. So in the Middle East, when we are 400 million of people and 60% of the population is under the age of 25, do you think they'll go to a bank to open a bank account? I don't think so. I think they'll grab their smartphone, and we have the highest penetration of smart devices in the world. So they'll grab a smartphone, download a wallet, here you go, they're banked in 30 seconds. So fantastic initiatives, I love it. We are watching our colleagues in Europe learning, but we have different practical problems where open banking might not be the solution for that. There are different solutions.
Financial inclusion is of critical importance for bringing in lesser served communities throughout the world. We're very supportive of that, but I just will say that at the end of the day, for the United States in particular, know your customer, AML, CFT obligations reign paramount in terms of national security for us. And so open banking, yes, but know your customer.
Do you know that your banks sued the federal government when the KYC regulations were introduced in the 80s? And of course they won, of course they lost, sorry, they lost. And unfortunately, starting from the 90s, the rest of the world now have to comply with that. Is that really something, is that something we should rethink, do you think? Is that something we should stick to? I don't know.
I will say this, that I think we are transitioning away from an entity-based model to a transaction or an activity-based model. And so that's going to change the know your customer world. And I think it's definitely a conversation that's going on right now.
I think privacy is the right, not, it should be a constitutional right, not something it's being taken for granted right now. But we can have that separate conversation.
Okay, thank you guys. I hope you all enjoyed the discussion.
Thank you.